Paul, the thing we can't ignore, of course, is the Nvidia earnings. I say that, but the after-hours move wasn't huge. Nasdaq futures actually pairing earlier losses as we get closer to the European Open here. So how do you put the Nvidia story in context for us?
Yeah, good morning, Anna. I think, it's a really interesting question, and way to look at it is the idea that Asia's markets really didn't respond all that much at all to what we saw with Nvidia. Remember, we built this as a really big risk event. Implied volatility was suggesting there could be really major swings either way based on what the earnings showed, and indeed it did drop quite a long way, around 3% in after-hours trading in the US, but the knock-on impact for broader markets doesn't seem to have been all of that great. I think there's a couple of things to think about. One, the earnings really weren't all that bad. There's some uncertainties in there, and that's part of what made them look a little bit weaker, the fact that they excluded China from there altogether. And two, even then, the size of their earnings is still pretty phenomenal, all else being considered. I think that Asia's markets had an extra fillip because Nvidia is a bit worried about what it can do in China. That is opening space for the Chinese technology companies to also come in, and so they had another good day. But all in all, the market was happy enough with that and focusing on other things.
Other things. What's happening in Japanese bonds, Paul?
Yeah, we know the Japanese bonds have been under pressure, particularly at the long end of the yield curve for some time. People worried about inflation risk. Today, it was the front end of the yield curve, an auction of 2-year notes that really didn't go very well. The weakest demand in 16 years when you're looking at the bid-cover ratio. And I think that tells you a couple of things. One, just in general, appetite for JGBs is very weak and subdued at the moment. And two, people are getting ready for the central bank to raise interest rates. One of the BOJ members was talking today, sounded a little bit more hawkish than the market might have expected. So we're getting ready for the BOJ to hike. Remember, the rest of the world obviously going in a different direction at the moment, but if that's going to happen, you're going to want higher yield in order to own those bonds. And so the risk now is that ricochets again back across to the far end of the yield curve. We've been talking to international investors who thought that would be a good option given the extra pickup they could get with currency hedges as well, but they keep getting thwarted, and all of the profits from that trade are getting wiped out because the yields keep on going higher as well. So troubling times there for the JGB market.
Paul, let's continue the story in Asia specifically. Walk us through the Indian market here. We now have 50% tariffs on India. We have concerns and threats about secondary sanctions, not just from the States, but from Europe now as well. What is the thinking?
Yeah, we don't talk a lot about India in this slot, but I think a good moment to do it given the fact that we're getting hit by those extra tariffs on India right now. But what we've been worried about has been the weakness in the bond market again over there as well. We have states looking to fund and the government as well, sort of putting a lot of stress on demand outlook. So today we reported that the central bank was paying attention to it, and that seems to have stopped the sell-off just for now.
All right, Paul Dobson, Bloomberg's executive editor for Asia Markets, walking us through some of those dynamics. We thank you so much. You get more analysis from him and the team. MLIV Go is the function on your terminals.